PayPal might have gone back to being PayPal. At the time of making this video, the stock is down 9.2% after the company reported their latest quarterly figures. The quarter itself, a beat across the board, it was a solid quarter. The problem, of course, was guidance. Guidance was, although some areas a beat, overall quite weak, and then the commentary on the earnings call was pretty boring. I mean, if we didn't have the earnings call, I don't really think much would have changed. Now, I understand why they do not want to reveal too much during an earnings call because it is not an announcement event. They are going to announce way more at the end of February during their investor day. And I think that if you are on the edge right now, you don't know what you're going to do with your PayPal shares or if you want to buy more or stuff like that, I think that investor day will answer most of our questions because, believe it or not, on the earnings call, I don't know why, but nobody cared enough to ask about the advertising business, the goals, the prospects, nothing about that, nothing about the stablecoin business. Quite strange if you ask me, but then again, maybe they're asking this after the earnings call, or maybe all of it will be revealed during the investor day, so we'll have to wait. I believe it's February 25th, if I'm not mistaken, so we'll have to wait for that. All in all, I'm not selling, I'm not buying more shares because it's already quite big position for me. Am I disappointed by this stock price? Yes, I thought it would be at $100 already, but it is what it is. Year on year, the stock is still up 30%. You might think, okay, but holding PayPal, opportunity cost, yes, could very well be, especially if you decided to buy PayPal and not another stock, another company, and that other company has outperformed PayPal, that is true. But to say today that in hindsight you should have bought something else, I don't think that's a fair assessment. You're just making trouble inside your head. I think all in all, PayPal is doing the right thing. It might not be as exciting as previously expected, but hey, I'm in this one because I do believe that a full recovery is quite possible. Yes, if you zoom out in the last 5 years, it's still down. It's still down. Do I think that we're going to reach this point right here, $300 or so in the next year or so? I don't think so. I don't think in the next year, but I think before 2030, I think that's definitely feasible. So that's more than 3x from here. I don't know how long that will take, but I do believe that eventually the company will reach those prices. Plus, I mean, $15 billion in share buybacks extra on top of the other $4 billion that they had with a market cap that they're at right now. I mean, they could retire close to 20% of the shares. That's quite significant, Anyways, let's discuss a couple of things that were mentioned during the earnings report and earnings call. So if you enjoy this type of videos, hit all the buttons. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with a couple of comments here from Alex Chris. PayPal had a strong finish to a successful 2024 with results that were better than expected. We set out the beginning of 2024 to narrow our focus, improve execution, and reposition the business. 1 year later, I'm proud that we've laid a strong foundation for long-term profitable growth across the company's most important areas. The improvements we made to brand the checkout, peer-to-peer, and Venmo, plus the process we made on our price-to-value strategy are beginning to show up in our results. The strong momentum we've created sets us up well for 2025, which is about scaling adoption. I'm excited to share more at our Investor Day later this month. So all in all, bottom line here, free cash flow came in better than expected, $2.1 billion. It's still down 11% year over year, but still a very, very strong quarter with regards to free cash flow. Adjusted free cash flow just under $2.1 billion, and that's of course up 171% year over year. Now these are the focus area: win checkout, scale Omni, grow Venmo, accelerate SMB. With regards to Omni, nearly 100% PayPal debit card TPV growth, Venmo over 30% Venmo debit card monthly active accounts growth, and over 20% Pay with Venmo monthly active accounts growth as well. Venmo is definitely a huge part of the long-term thesis for growth in PayPal. Accelerate SMB, 45% of eligible SMB TPV on PayPal complete payments. So all in all, for the quarter, TPV increased 7% year over year, revenue up 4% year over year, transaction margin dollar up 7%, transaction margin dollar excluding interest on customer balances up 6%, Non-GAAP EPS up 5% and free cash flow, as we've seen, down 11% year over year. Couple of good things here. Active accounts continue to increase now, up 2% year over year to 434 million. Monthly active accounts up 2% as well to a record 229 million. So that's great. Transaction per active account did drop, but I'll talk about the reduction there in a second. If we look at Venmo TPV, that has increased 10% year over year. In the past, that only grew 8%. So now we're seeing nice little reacceleration here. Same with P2P TPV, up 7%, up from that usual 6% that we had before. And then total take rate, finally up 1.91%. Transaction take rate up as well, 1.73%. So that's quite good. Quite good. We're finally seeing maybe this is the bottoming out. Could be, and that's could be a very good sign. If we look at transaction margin dollar, that's also up 7% year over year. So that trend continues on the way up. Transaction margin 47%, very, very nice to see, up 128 basis points year over year. So those are, despite the stock's reaction, those are very, very good positive things to see, especially where we've been in the past. I mean, this is a completely, in my opinion, a new PayPal with much better leadership and goals. Might not be as exciting as expected, at least not right now. We could have a very, very different conversation 3 weeks from today. Don't let the stock price reaction make up your mind. Now, the big issue for the quarter, and that's probably for people that don't really follow the business, is PSP, unbranded card, basically Braintree. That only grew 2% year over year, which is down from, I believe it was 11-13% last quarter. But if you remember what they told us last quarter, they said this. They expect revenue to grow by a low single-digit percentage. This is directly related to Braintree merchants' negotiations and ongoing efforts to drive quality, profitable growth. As they mentioned earlier, this is a deliberate action and a continuation of the strategy we've articulated throughout the year, where we have accepted a lower near-term Braintree revenue profile in exchange for better margins as we have renegotiated agreements. As a result of these efforts, we expect lower Braintree volume and revenue growth in the fourth quarter, which is exactly what we got, and through 2025 before reaccelerating from the reset baseline. So for those that don't follow and only look at those numbers and like, oh, scream, look at this, completely destroyed. No, this was expected. Of course, it's not great to see, but I'm not surprised. And to be honest, after I've seen transaction margin dollars, transaction margin going up, I'm quite okay with that. Of course, it has to play out, right? It has to play out because I want to see a reacceleration in revenue growth after all of those renegotiations. So all in all, this is basically it. These are the key financial results. They did return $1.2 billion via share repurchases, $6 billion in the trailing 12-month basis. I do think that they could have returned a little bit more this quarter, especially since they generated more free cash flow, but fine. And so as for guidance, transaction margin dollar of, between 4 to 5% growth, non-GAAP EPS growing 7%, and GAAP EPS $1.12. They give us the comparison for Q1, and that's 83 cents. Don't forget they did change the way they report these things. As for fiscal year 2025, transaction margin dollar growth of the same thing, 4 to 5%, and that includes a negative impact of $150 million from lower interest on customer balances and at least 5% transaction margin growth excluding interest on customer balances. As for non-GAAP EPS, between 6 to 10% year-over-year growth, GAAP EPS $4.8 to $4.95 compared to $3.99 for the fiscal year 2024, and free cash flow midpoint $6.5 billion, which did miss the analyst expectations of $6.8 billion. They expect to repurchase around $6 billion worth of shares. During the earnings call, they mentioned a couple of things that I did miss at first, but here they are. Upgrades are live for more than 25% of US checkout traffic. That's up from just 5% last quarter. They signed Roku, NBC Universal, and StockX when talking about Fastlane here. And with Fastlane, there are now over 2,000 merchants up and running. They also said that 25% of Fastlane users never had a PayPal account, and half have been dormant. So that's 75% they say, which means, there is quite a lot of growth potential there. They said 1.5 million first-time PayPal debit card users were added, and debit card TPV, not TPC, small typo by myself, that's up 100% in Q4. As for Venmo, 64 million monthly active accounts are on Venmo and growing. Monetization is going well. And then with regards to Braintree, they said that large Braintree renegotiations are ongoing, and those will hit the business, revenue by 5 points, a 5-point headwind for revenue in 2025. Then once we reset that, growth should reaccelerate. And so right now, if you look at the stock, it's not in a great place. It's between the 50 and the 200-day moving average. The 200-day moving average sits at $77.2. Will it go as low as that? Remains to be seen. I mean, it does seem like PayPal right now with all of the buybacks, I really don't think it will go that low. Well, we could see $77, but I am expecting a rebound there unless there is a macro thing again, some tariff overreaction. Remember Monday, right? Oh, tariffs going to ruin everything. Well, guess what? It didn't do much, right? It didn't last long as predicted. So all in all with PayPal, solid quarter, pretty boring earnings call. I do expect a lot more information during the investor day, and I think that's when most should make their decision. Not today based on the stock's reaction. Look at the business. The business is trending in the right direction. It just needs us to be a bit more patient. That's it. That's my opinion, of course. Share yours down in the comment section below. Like, subscribe to all of that, and I'll see you all in the next one. Bye-bye.